What's going on, everybody? In this video, we're going to be talking about 3 dividend stocks that have been consistently paying their dividends for over 100 years. Now, a little disclaimer is I do not own any of these 3 stocks, but we're going to be looking into the good and what I believe about these companies. These are very solid, well-foundation companies. If they've been corporations and been able to pay dividends for at least 100 years each, most of these with a lot of growth in their dividends over the past like 25 so plus years. It's a lot of upside potential. So let's just go ahead and get straight into it. But before we do, subscribe to the channel, turn on post notifications so that you don't miss out on any future videos. Thank you for stopping by. Now let's go ahead and just get straight into it. So the first stock we're going to be looking at is General Mills. That is ticker GIS. Stock is up 19% over the past year, and year to date alone, it's up 7%, which is incredible returns, assuming that we haven't even been through 5 months of the year. Earnings per share is about $3.82. They have a forward PE of about 19, which is really, really good, and a dividend yield of 2.81%. Now, their dividend scores are pretty good, a payout ratio of just below 55%. Dividend growth is only for 2 years, where they've been consistently paying dividends for over 100 years. If we go ahead and look right here, General Mills and its predecessor firm have paid dividends without interruptions for 120 years. Now, that's a massive thing. We go ahead and just see there was no growth right here, from 49, and then there was like a little pause all the way from 2018, so that's why there's no growth. But then they did recently just increase to 51 cents per share, potentially going to increase from 51 to, who knows, 53, 54. Could see some upside growth on the stock. Now, General Mills, let's go ahead and talk about who they are. What they do is they manufacture and market branded consumer foods worldwide. So if we want to just look at their website and kind of see the brands that they own, Annie's, Bisquick, Chex Cereal, Cheerios, Chex Mix, Cocoa Puffs, a number of brands, okay? The list goes on and on and on, And so they just sell a ton of different foods, and there's been a lot of talks of, oh, recession this, recession that. With a company like this, you probably do not have to worry because, they sell products that people are going to be using whether or not the world is falling apart. People have to eat, and so keep that in mind. But looking on some key ratios, we're seeing huge profit margin of 12 and 17%. Growth on the revenue is not the best, but earnings growth is still doing very good, up 11% year over year. That's incredible. Looking at their financials, major growth. Year over year, gross profit has not been absolutely increasing recently, but it's because the cost of revenue did kind of increase, but revenue is still growing year over year. Looking on some key things real quick, net sales were about up 4%, which is pretty slow, but still pretty good. Their profit declined by 1%, but adjusted operating profit was down 6%. Earnings per share of $1.08 increased by 13%. That's pretty big. So this company seems to be performing pretty well right now. I mean, we're seeing good numbers on their stock, up 7% year to date over the past 5 years, up 23% in the past year, up 19%. So I do believe the stock has huge potential. Let's go ahead and talk about stock number 2, and that's going to be CHD, Church and Dwight Company. Trading for $103 right now. They have a yield of 1.02%, a PE, a 4P of about 32, and up for the past year, 19%. Year to date, they're up 1.29%, so pretty flat. Be buying in at a pretty good potential discount or fair value. Now, their dividend grades, let's go ahead and look at these. They have a payout ratio of 33.33%, a dividend growth of 22 years, and a 5-year growth rate of 7.14%. Some key things to look is here are some numbers that they're providing to the shareholders. Really good returns, These are very solid shareholder returns. Let's talk about who this company is. They develop, manufacture, and market household, personal care, and specialty products. If I go ahead and show you this, I'm pretty sure you're going to recognize this logo. Whenever I see that logo, I kind of just think like baking soda, things like that. But let's go ahead and talk about what they do. They have 3% organic sales growth, 8% earnings per share growth. Here is kind of what we're seeing on their over 10 years of solid organic sales. And then adjusted earnings per share, we're seeing a lot of good things happening. And they own about 14 different brands, Vita Fusion, Little Critters, Waterpik, Orajel, Trojan, Arm & Hammer. A lot of different brands that are kind of making up this company. So let's go ahead and talk about some key things to look at. First up, they've been paying their dividends since 1901, which is a very big and honestly really good thing to see. But their sales have gone up about 5.7% increase over the past year, about 3% growth that they exceeded this by. Organic sales exceeded the company's outlook about 2%. Earnings per share was an increase of 8.5% year over year. So we're seeing a lot of good things with this company. Looking back into this, the dividends are going crazy, increasing year over year. Margins of about 16 and 19%. Revenue and earnings growth growing about pretty good, 5-6%, and looking pretty good in my personal opinion. We're seeing revenues increase, profits increase, looking really good on this company. Nothing in my personal opinion to worry about. I think that these are all the stocks I'm talking about in this video are potentially great investments just because of the foundations, the markets that they're in, the demand, things like that could definitely provide a nice position in your portfolio, especially for something that doesn't seem to be as risky per se. But let's go ahead and talk about the third stock on this list, and it's one of the most notorious dividend stocks out there. Everybody loves it, So let's go ahead and talk about it, and that is going to be the Coca-Cola Company, ticker KO. PE of about 26.62, that's a forward PE, and a yield of 2.7%. Over the past year, they're up 22%, and year to date, they're up 10.51%. Looking at their dividends, they have a payout ratio of about 72%, a 5-year growth rate of 3.66%, and a dividend growth record of 59 years, making this stock a dividend king. So let's go right here. We're seeing dividends have been incredible. They have been paying their dividends since 1920 for 102 years. That's crazy, okay? So this stock has seen through thick and thin, recession, wars, all these different things, and they're a massive company that I don't see getting taken down anytime soon. Coca-Cola has margins about 26 to 30%, which is incredible. Revenue growth of about 9% year over year, and earnings growth about 66%. That's just because of COVID and different expenses that the company had to incur. But still, these numbers are incredible. Looking at Coca-Cola, their financials, flawless. The only thing is the COVID. When COVID happened, it kind of caused the company to struggle, but they've already rebounded and are looking better than ever in both profit and total revenue. So that's a very good green flag in my personal opinion. And looking further into it, analysts are expecting good numbers, good numbers on their sales growth to grow about by 5 to 8%. And we're seeing good numbers on their earnings expectations, from $2.45 for the year of 2022 to $2.63 per share in the year of 2023. But that is going to wrap it up for this video. So if you enjoyed it, subscribe to the channel, turn on post notifications to miss out on any future videos. Thank you for making the end of this one. Leave a comment below, all the good stuff. Check out M1 Finance using the link in the description down below or in the pinned comment. Deposit some money, get some money back. Free money that they're handing out. Get it while you can. Thank you again, and I will see you at the next video.